Several years ago now, I invested around $50,000 to $55,000 into DIVO, or the Amplify CWP Enhanced Dividend Income ETF. And believe it or not, DIVO has been one of my best performing overall investments over that time frame. Not only that, but DIVO up until this day is on my regular buy list, and I've been trying to grab as many shares of DIVO over the past few weeks as possible. Now in this video, we're not only going to go through my personal position in DIVO, and I'm going to share with you guys how much income DIVO pays me on a monthly basis as well as on a yearly basis. But along with that, I'm going to share with you guys what DIVO is if you're not already aware of it, how this ETF works, and why I'm so obsessed with it compared to most other stocks and ETFs across the markets. So if you're a dividend investor that ever thought about buying DIVO, or if you're just generally interested in dividend income and growth potential all in one ETF, well then make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. Now before we go through my actual position of DIVO, I'm going to share with you guys exactly how many shares I have as of right now, how many shares I'm trying to get to by the end of the year, and everything of those sorts. Let's head over to the Amplify CWP Enhanced Dividend Income ETF's facts page so we understand exactly what DIVO is, how it works, how it generates so much income, etc. So first and foremost, it says a proven approach to high quality equity income. DIVO is designed to offer monthly income while providing a higher risk-adjusted returns that correspond generally to the CWP Enhanced Dividend Income portfolio. DIVO seeks to provide gross annual income of approximately 2 to 3% from dividend income and around 2 to 4% from option premiums. It then says reasons to invest in a DIVO. Number 1, 2 potential income streams. DIVO seeks income from dividend-paying stocks and by opportunistically writing cover calls on those stocks. Now number 2, it says professionally managed, access to professionally managed dividend and option income strategy through the efficiency of an ETF. Number 3, seeks to lower volatility. Dividend and option income may provide lower share price volatility versus the overall market during times of broad-based market declines. Now to go over all three of these and share with you guys what I think of them. Number 1, I love the fact that DIVO does invest into dividend paying names like Caterpillar, like in the health group, like Home Depot for example. Generally super high quality blue chip names that historically have paid dividends and also raised their dividends over time. But along with that, because of the cover call overlay, DIVO is able to offer a lot more yield than you would of course get by just buying into names like these. Now also I like the fact that DIVO is relatively cheap at 0.56%, not all that expensive, not all that crazy. And honestly, with the click of the button buying shares of DIVO, you are getting exposure to a professionally managed fund that buys into high quality names and professionally sells call options. Now also number 3, this is anecdotal real life experience. DIVO definitely is pretty low beta across the market, whether the market's up like crazy or down like crazy. DIVO sort of always kind of stays in its lane. Now of course, for investors out there that are okay with bigger swings in their portfolio, DIVO honestly might be a little bit boring to you, but if you're trying to build out a foundational position and get paid nice consistent distributions, DIVO is an awesome ETF to look into. Now DIVO's been trading since December 14th of 2016 and has around 24 different holdings in the ETF. So this ETF, you're not going to get exposure to like 100, 200, 300 different names. You're getting exposure to a high quality curated basket of holdings. Again, from what I've seen with DIVO, all blue chip, super high quality names that I've never had a problem having exposure to. But again, with that cover call overlay, it's not like you're getting direct exposure necessarily. Now we're going to go over this later more in detail, but since inception, DIVO has offered around 12 to 13% return year after year after year, which is really impressive, especially because this ETF does offer investors like myself and like probably a lot of you guys a lot more income potential right away. Now to dig even deeper on how DIVO works, this is a really cool breakdown active management selection process. Number 1, dividend growers. DIVO is managed with a strong emphasis on owning high quality large cap companies with historical dividend and earnings growth. Number 2, sector allocation. DIVO is relatively balanced among the traditional 10 S&P sectors, with CWP determining which sector to over or underweight based on various factors. Next, security selection. DIVO only consists of around 20 to 25 stocks, which are screened and adjusted accordingly to attributes including things like market cap, management track record, earnings, cash flow, and return of equity. Now lastly, this is the important part, especially for income generation, tactical covered call writing. Covered call options are written on individual stocks on a tactical basis, not on an index approach. So a lot of covered call ETFs out there, as you guys are probably aware, they'll buy into the constituent you into the S&P 500 or the NASDAQ and then sell a cover call on it. But with DIVO, the difference is that you're getting exposure to individual names, again, in my opinion, very high quality names, and then you're getting a tactical cover call writing strategy, which again, you don't even have to worry about. Now, the reason I love DIVO personally is not only because it offers around 4 to 5% yield, depending on where you buy into it at, but also over the long term, and this is all the way back since December of 2016. This ETF back then was trading around $24, $25, and since then it's more or less been trading up and up and up with a few little dips here and there. Now, once again, DIVO is probably not going to be an ETF that you're going to get rich off of today or tomorrow, but like I said, across my entire portfolio, as far as a low beta holding, this has been one of my top performers over the past 3 or 4 or 5 years. Now, again, I'd like to showcase DIVO's growth as far as price return because this ETF, as we all know, pays a nice yield, which I'm going to show you in a second, but also it still has grown over time, which means that even if you're a dividend income focused investor like myself, let's be real here, a lot of us are concerned about income generation and we don't want to wait around forever. DIVO also in the back end is probably going to keep growing over time, at least based off of historical performance. Now, getting into the fun part, DIVO's dividend. The trailing 12-month dividend yield is around 4.7%, which is not bad whatsoever. I mean, SCHD is around 3.6%, 3.5%, so you're getting an entire percentage more compared to SCHD. Not to mention if you were to compare DIVO to the S&P 500 as far as on an income basis only, not total return, not price return, just income only, you're getting a lot more income generation a lot sooner. Now, DIVO pays dividends monthly, and this ETF isn't really built to be an ETF that's going to grow their dividend over time. I mean, a covered call ETF in general doesn't normally have that mechanism. But because DIVO does buy into names that historically have grown their dividends as well as the performance over the past year or so, DIVO's monthly payouts have went anywhere from 14 or 13 cents per share per month, upwards to as of recently around 17 cents per share per month. So especially for someone like myself that owns quite a few shares, that small amount of dividend increase is honestly very helpful. Now, I say all that to say that DIVO probably isn't going to be one of the top fastest dividend growers in your portfolio, but hey, over the last year or so, I haven't minded it. Now, currently in my long-term portfolio, I'm holding around 1,579 shares of DIVO. And because DIVO, at least as of recently, is paying around 17 cents per share per month, that means that on average, I'm probably getting around 250 to 270 as far as income goes on a monthly basis, which is not bad whatsoever. Now, keep in mind, because I bought most of my shares of DIVO much cheaper than it is currently, my yield on cost is actually pretty decent. Now, this also means that with this one position alone in my portfolio, I'm receiving around $3,000 more or less per year. And this is only going to go up because I've been buying more shares of DIVO and I intend to do so throughout the next year. So now that we talked about DIVO, I shared with you guys the income potential, the amount of growth, and the performance this ETF has had historically. I wanted to leave you guys with the main reason I personally am buying this ETF, and I want to keep buying it throughout the next year. This ETF historically has offered a nice mix of growth potential as well as massive amounts of income from day one. And I say massive because, I mean, the general market's going to pay you 1 to 2% per year as far as income goes, so almost 5% is over double. But not only that, I believe that DIVO is going to keep growing over time, probably to $45, $50 per share within the next year or so, which is sort of just going to be a bonus because, again, even if DIVO traded sideways and pays me 5%, 6% per share per year, I'm not necessarily going to be that mad about it. Now, as always, I wanted to leave you guys with what DIVO has done historically. So over the past 8.07 years, keep in mind, I've been buying DIVO for probably 5 or so of these. This ETF is offered in around 11 or 12% average annual total return, and this is with dividends being reinvested, or around 145% total return over this time frame. Not the fastest growing ETF across the entire market over this time frame. I understand that there have been other things that have outperformed this, but as far as a slow and steady way to earn income and get a little bit of growth, DIVO is honestly one of the best ETFs that offers a perfect mix of both. So now that we talked about DIVO, the Amplify CWP Enhanced Dividend Income ETF, I share with you guys what this ETF is, how it works, my thoughts on it, and exactly how much I'm earning personally after a $55,000 more or less investment in it. I lastly want to hear from you guys down below. What are your current thoughts on DIVO as far as a position in your portfolio? Do you hold on to it? Yes or no? And if not, what's something similar that I should look into? Let me know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.